Hi guys, I am just editing right now and I just wanted to pop in a little disclaimer, just letting you know that Beck, who is going to be in this video and speaking with us about finance, is one of my best friends, and she's never been on YouTube before and is probably feeling pretty vulnerable putting her opinions on something we're not supposed to talk about out on the internet. And I would really encourage you to be kind and supporting in the comment section. She's not into Barefoot, but that's okay, we can like her anyway. I'm kidding. She's offered up some really cool advice, and I definitely took a couple of things away from just sitting down and chatting with her. So it's less of an interview, more of an informal chat between friends, but I definitely got something out of it and I hope you will too. So thank you and please be supportive.
Okay, £20.
What?
£20.
Every time someone says sweaty palms, I think of the Eminem song.
See?
Thanks. What if you mind? This is gonna be a long process.
Hi, welcome to Sam's YouTube channel.
Hi guys, I'm back, and today I've got Beck with me, who's going to be answering our banking questions because she's had how many years experience in banking?
5.
5 years experience in banking. So here we go. Have you read The Barefoot Investor?
No, I haven't.
But are you familiar with what he's about, and have you heard about what he sort of talks about?
I'm familiar with what people have said, such as yourself and all that, and obviously social media and things like that.
Yeah. So what are your thoughts on The Barefoot Investor?
From what I've heard and seen, it's like as if you've got to have several accounts or something, and none of them are named for something that matters to you, such as fire extinguisher and things like that, whereas, you know, sometimes you can make them more personal.
Yeah.
If you've gone through a bank or something, even simple as online banking, you can change what they're all called so that they actually mean something to you,
Yeah.
which makes you want to achieve that goal quicker.
So as a banker then, what do you believe is a good way to have your bank account structured, your setup?
Well, me and my partner, we have 4 accounts. So we have our everyday account, which is basically our, you know, everyday usage.
Sorry.
And then we've got like our holiday account, our house account, because we're in the middle of renovating our house, and our bills, which is basically from medical to any emergencies, anything that happens. So what we always do is when we get paid, we actually give ourselves more in our everyday account so that we don't have to dip into those funds, which makes us feel terrible. And then at the end of the week, when we get our next pay, whatever's left we get to distribute to those accounts.
That's a good idea.
So saving you from, you know, pulling it out of your accounts all the time and then you feel guilty or whatever, you just give yourself that little bit extra.
So what would you, like, give me an example of what your everyday account is used for? Like buying your lunch?
Yeah, so like our food shop,
Okay.
fuel.
So that's not a bill?
No, because you're gonna have to do that every fortnight, and it's something that you're always, you know, it's an everyday sort of thing. Is you shopping in my opinion. So that's why we have like fuel, shopping, and then like, you know, if we want takeout one night, or you know, if we want a t-shirt or something like that, that's what that comes out of.
And how do you decide what amounts to put into what accounts? I've gone off script. Sorry. Yeah, like how do you know what to budget for each account?
Well, with our budget for each account, so we might put $70 a week into our house account, $7 a week into our holiday account, and then we put like say $600 into our bills account.
Yeah.
Because like obviously every month we've got our mortgage, every 3 months you've got your power bills, and then, you know, anything that comes up, so like medical or, you know, a vet bill or something like that. So we always probably go over the top with our bills.
So you've got a buffer in there.
But that's what you need, because if something comes up that's an emergency, that's what we use that for as well, because it's just a general bills, which any emergency normally is a bill.
So can you explain, because I know we had an argument about me having so many accounts because you said that you think it's stupid based on the interest. So explain what you mean by that, like what interest is and how it works and why you think it's silly to have so many accounts because of the interest.
Yeah, interest. So if you've got several accounts with several little amounts, then you're only getting like say $2 in each account. Whereas so like with the 3 accounts that I earn interest on, so I earn interest on my bills account because I have it in like an online saver that still generates interest every month even if you do take money out of it. And so then our house and that, we've got the same system, and because our bills account has so much more money in it rather than it being like sectioned off, we're getting more on it. So basically with interest, the banks are paying you to have your accounts with them because as soon as you've got more money in it, you're obviously going to earn more interest.
That makes sense. So having more accounts means you're getting less interest.
Yeah, because then you're just getting little drips and drabs everywhere. Like, you know, you get 60 cents, whereas if you've got maybe all of that money compiled into lesser accounts, then you're going to get more.
Yeah, that makes sense. What are your thoughts on credit cards as a banker?
I hate credit cards.
Really?
Credit cards are terrible.
Interesting. I thought you were supposed to love them and like preach that shit as a banker.
They do, but they're awful. I just think they're the biggest traps. I was saying before, with them, they always, so, you know, they'll go, oh, do you want to pick your limit or do you want to just see what you get approved for? And that's like the trap, because you're always going to get approved for like 5,000 or something like that. And then you think, oh, I've got 5,000 on this plastic bit of card, and then people go out and spend it. And then what people do is they then send out the statements that are like, your minimum payment's $25. But they never say how long it's going to take you to pay off if you only pay that $25. Plus then you've got the interest charges on top of it, which is why the gem cards are even worse from like the furniture stores, because their interest rates are about 22 to 28%.
Crazy.
And my mum had one, and it worked out that in the years that it was going to take her to pay it off by doing the minimum payment, she was going to pay $60,000 in interest.
Jesus.
And that's just
insane.
Crazy. It just blew my mind. So we got her to consolidate all of it and put it into a personal loan.
So she saved money doing it that way. Wow. Okay.
So that's why anyone with like credit card debt should just consolidate into a personal loan, because then you're set with the payment. You have to make that fortnightly payment, and it's guaranteed to pay it off. Whereas with a credit card, you're just paying you $25 a month, and that's not going to get you anywhere.
Nowhere. Exactly. What about Afterpay?
Afterpay, I don't think that's as bad, but I think you've really got to read the fine print, because if you miss a payment, it marks your credit rating. And I don't think people realise that Afterpay actually affects your credit rating, because it does.
Yeah, so we had a conversation about this earlier, and I knew that ZipPay did. Because I've had, I went for one of those gem or whatever it was, Visa cards from like JB Hi-Fi or somewhere like that, and that came up on my credrit rating. ZipPay. Yeah, so Afterpay is one of those things
that does pop up on it. I think it's basically like a lay-by, but this one actually does pop up on your credit rating. So if you do default on it, that's going to show up to the banks.
Well, we all know how I feel about Afterpay.
I think if you're doing Afterpay, you should probably limit it to like one item.
Yeah, see, that's where I think they get you, is you can have like up to $500 or something like that.
Yeah, and then you find that you're paying off several things, whereas at least if you use it, it's all about discipline.
I don't have that.
Same with having 4 accounts, it's just about
discipline.
And like with the money that we put in our everyday account, going back to that, we always try to make sure that there is money left over. So that we can, because that's always a good feeling.
So that's sort of like you're saving as well, like you're trying to save that, not blow it all.
Yeah, exactly. Like, we give ourselves extra, but that doesn't mean we have to use it.
What about then, so what are your thoughts about shopping around for like a lower home rate and like...
Absolutely.
Yeah?
Absolutely. And don't be afraid to say if you've got... So if you go to Commonwealth and they give you one rate, don't be afraid to go to ANZ and try to get a different one and tell them what they've offered you, because they can definitely do better.
So how often would you change though? Because it's quite a process to do so.
It depends how... So some people fix their home loans, so it's always good to check on that, because a lot of people forget that their rate's no longer fixed.
Yep.
So when you first get your home loan, you'll go from a 1 to 5 year fixed option, and as soon as that drops, you need to go back to the bank and get it renewed.
Okay.
Because as soon as you drop off from the fixed rate, you're then at a higher
It
rate
goes up
instantly.
higher. And I'm probably betting they won't tell you that either.
They don't. They don't. It's in quite fine print on your statement,
Yeah.
but that's all you get.
What about insurances and stuff? Do you think like it pays to shop around, like maybe annually or something, just check you're getting the best rate?
Absolutely. I feel
Same thing, compare them and...
on ads they say, oh, you know, we're the cheapest, and I called that company and they weren't.
I had that with Yui.
That's the company that was
Yeah. I tried to, I literally called them, they're like, yeah, we can definitely do a better rate than that. And it was because I spent a whole day calling around every insurance company I could find to get quotes, and they were the highest by far.
Yeah.
Out of everybody.
They're the highest, and I called Yui first, and then I called RACV, who bet them by like $100, and then I called Yui back to see if they could beat what they'd offered, and they still couldn't get close.
Wow, shit.
So, but that's worth doing because they will try and match whatever you've been offered.
Yeah.
But that's the same with like energy companies and everything like that. You should shop around there as well.
Yeah, definitely, and especially I know like Energy Australia, this time of the year, like summer, they are doing energy deals, and then if you call them in winter, you get better gas deals.
Yeah.
Which is interesting. Worth the call. Any other pieces of information and advice you'd like to bestow on everybody?
Check your banking every 6 months.
What do you mean check your banking?
Go in and see someone, definitely have a chat, because they're not always going to call you, and the banks are constantly changing their rates and things like that. So it's always good to watch the interest rates and see how they're going. And it's not hard to change banks. Everyone thinks it's a really drawn out process, but it's so easy. It's so simple, and it's so worth it, because I feel like people go, oh, it's too hard to change all my direct debits, and
it's like a day.
And yeah, it's so worth it in the long run.
Yeah. Okay. Well, there you go.
All finished.
Thanks, Beck, for coming on my channel.